Hello and welcome to Investing Confidential. Today I'm going to talk about the macro situation because it's a mess, a real mess. Tomorrow I'll talk about stocks, uh, but today I'm going to talk about the Fed. Some really bad news came out today in the middle of the day of the Treasury auction. I mean, this is getting worse and worse, and there's nothing the Fed can do to hide this. So let's get right into it here because it's gonna get ugly here. So last week I didn't bother talking about it last week because there's too many talking heads. The Fed stayed pat. Okay, the market thought, and obviously had big stock market rallies. As I told you, you're going to have these big stock rallies in their bear market rallies. Market thinks no more rate rises coming, and they're betting on a cut, a pivot, as we said. We talked about for quite some time. I mean, folks, there is no chance of rates being cut in the short term, even in the medium term. And, look, Powell is a fool. Okay. He goes out last week. They don't do anything. He starts talking to the press. We know he's a dove in sheep's. We know he's a dove, but he has to try to talk tough. He didn't talk tough. Okay, market took it as bullish, and they rode stocks up, and he confused the market. Okay, look at the terminal rate here. The terminal rate went down hard. So did the 10-year. Okay, everyone's like, whoa, betting, hey, let's buy the 10-year, buy the 10-year, buy the 10-year. So then today we had, I don't know how many damn Fed governors spoke, a lot of them. Okay, and I'm just going to read off some of these comments. Okay, so you had, Barkin talking about, not really saying much at first, saying that slowdown is coming, that we need a slowdown for inflation. Then we had Bostic saying that the market is, their policy is restrictive enough, meaning he's indicating that they may not raise any more rates. But again, he's a fool as well. Bostic again goes back and says, "Oh, we got to stay restrictive until we get down to 2% inflation." Okay, the guy's a fool. But anyway, this is what they're saying. You got, Barkin again saying inflation is too high. Despite all this progress, inflation is too high. This continued. All these Fed people came out, all these Fed governors, even Yellen was talking about the economy being strong. I mean, she's a fool, right? So there was a lot of talk today, and this is why the market drove lower. Then you had Powell, continued inflation progress isn't assured. We are not confident that we've achieved such a stance. Okay, this is the opposite of what this fool was saying last week. I mean, the guy is just inflation. I quote: "Inflation has given us a few head fakes." This is this moron. Okay, again, unclear how much inflation will fall further from supply improvements. I mean, this guy is just, again, he's losing credibility. I mean, he's lost a lot of credibility, but he continues to lose credibility with these kind of comments. You say one thing one week, another thing another week. So again, this is the Fed. They can't be trusted. They're a bunch of fools, and this is the reality. Okay, and so the bottom line is, what they try to tell you today is inflation is sticky. I've been telling you that for months and months and months. Inflation is sticky. Okay. The Wall Street, obviously the White House, they want this market to go lower. They mean rates to go lower. They're desperate for a cut. Okay. And there's no chance for a cut. Okay. Here you see Goldman Sachs. Well, Goldman Sachs is a shill for the status quo, shill for the White House, shill for the staff, for, being bullish. They're bullish all the time. You can't, their research is garbage. Okay. As you can see here, I mean, they're just bullish. They're always bullish. They're bullish on the U.S. Okay, look at Goldman Sachs versus the consensus, how bullish they are. They're always wrong, folks. I can tell you, as someone who's been looking at their research for 25 plus years, they're good at some things, but as far as economic research, they're wrong. They're always wrong. And here's so they're bullish, but then you look at their global forecasts. Okay, down the line, they're looking for a slowdown. Everything, global, China, US, Europe, and yet they're bullish. This is what they tell you. So it's like, so if this is bullish, imagine what the real realization is for the globe. It's much worse. Okay. And just going back to the US, you've got non-farm payrolls. Okay. Look at the non-farm payrolls manufacturing. I mean, I don't even know how to even describe this situation. Okay, I wish this chart went back a number more years. This is like great financial crisis kind of stuff. This is, you know, the 1 month of COVID when literally the entire country was shut down. Manufacturing, this is the key to our economy. It's not services and government. These are high paying jobs. This kind of stuff. And remember, we're trying to bring our manufacturing back. This is what they call bringing it back. I mean, this is a disgrace, an absolute disgrace. And then when you read, again, I keep telling you, look at this chart, read between the lines. Okay, again, this is the data. This is not, you know, again, we don't know how good this data is, but again, the data skews positive. So when the data doesn't look very good, it's even worse than we expected. So when we look at this data, what's driving non-farm payrolls, meaning, you know, people working, getting paid, et cetera, et cetera. It's government, it's education and health services, which is government, okay? And it's hospitality. That's it. Everything else is negative. And hospitality, as I told you, it's low-paying jobs. It's, you know, it's there. You have to have the hospitality, but they don't pay. Okay, that's, as I told you before, that's the next sector that's going to be hit by union strikes. Okay, the hospitality industry. So the Fed's watching all this. Now, remember, bad news, they say bad news is good news, right? Oh, the bad news is for the economy, the Fed will cut, whatever. No, bad news is not good news. Bad news is bad news, folks. Get used to it. Get used to it. And look, the wage situation in this country, again, it's a problem for inflation and the Fed. It's good for you, good for anyone else. Look at the unions, okay? The unions are fighting back. Okay, you could see here, you know, the unions have had the highest raises in you're talking about you're talking about 40 years. The average raise for union, that's very good. Look what the trend was up until recently. It was down, 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 down. Now the unions are getting there. Look, I'm a conservative. I'm not talking politics. I'm talking about pure and simple. With this inflation, with food, with energy and everything else, with housing, okay, people aren't get paid a living wage in this country. Okay, they can't get paid a living wage, and you have, look, and the unions are fighting back, even though, as I showed you in the past, I'm not going to show you the chart again. This is the lowest, you know, presentation of participation in unions in years, but they're still strong. Okay, because inflation is killing the normal person. They're fighting back. Okay, look, you know, in the short term, we've seen crude oil come off. It's just a correction. It's going back up, folks. Trust me. And yeah, I don't know if you saw the article here, but the White House, these morons at the White House, which basically drain the strategic reserve, they come out and say they're going to fill the strategic. They're going to buy oil now. I mean, how dumb is that? How dumb? Who's running the White House? It certainly isn't, you know, Biden. It's got to be somebody who doesn't have a clue. Okay, and again, talking about the consumer, look at this. Look at this. I've showed this before. This is the average monthly mortgage payment based on the median home price, with 20% down, and the average 30-year rate. This, folks, if you look at it, look what it was right before the pandemic. It was less than $1,000. It's up over 100%, 2,300, and it's going higher. Okay, the good news is that it's unsustainable, and meaning that it's not going to be rates, it's going to be prices. Folks, prices for real estate is going to plummet. If you are sitting in New York area, you're going to say I'm a fool. But if you're in Texas, especially Austin, Texas, Dallas, if you're in the Carolinas, you're in California, if you're in Arizona and the Midwest and this everywhere except Miami in the South, you know what I'm talking about. Rents are going down, prices are going down. There's no activity. The bid and offer spread is massive. People want to sell and there's no bids. Okay, there's no activity, but there's going to be activity and it's going to take prices lower. Okay, and the bottom line is, okay, and again, these, forget about government numbers. I'm showing you the facts here. Look at the numbers from, look what's happening this quarter. When all the earnings came out this quarter, look what people were saying. This is the worst, okay, worst sales beat in I don't know, 4 or 5 years. What does it say? It's the trend is weakening consumer. Okay, weakening consumer. We keep hearing, we that's the reality from corporate America. But the government numbers are telling you something different. The consumer confidence, I hate to say, they're fake. Consumer confidence numbers outside of the University of Michigan, the government numbers coming from the consensus, the Bureau of Labor Statistics, these are fake numbers. I told you, they don't acquire them correctly. Okay, and the last few days, finally people are waking up because it's all about the debt. Okay, today, big news, 30-year auction, it failed. What does it mean when it fails? That means obviously the expectation was at the cap at a certain price, meaning a certain yield, no interest, yield had to go up. That's why the market sold off. And what did they tell you? The media came out and the government, US government came out and said, ICBC, the Chinese large bank, had a hack and they weren't able to participate. Folks, that's laughable because here is a fact. Here you're seeing the Chinese holdings of US treasuries. I mean, you see it. What does that tell you? ICBC, they were selling on a buyer, and the Fed's blaming them, or the print media is saying, oh, the auction didn't, bro. It was China. No, it wasn't China. Okay, here's other foreign holdings of debt plummeting, lower. We're going to be at a 30-year low soon. Nobody wants our debt, folks. Nobody. And what is this going to happen? It's going to put pressure on rates. And by the way, Japan, as I've been talking about, is going to make it worse. They're going to be sellers coming in. Okay. And here's the real kicker in all this. And this is why they're not looking at us. Okay. Because here's the interest, debt payments. Okay. The interest payments on it, and I told you guys about this months ago. It is $1 trillion and going higher. 1 trillion debt payments. Within 3 months, our debt payments are going to be higher than our military spend. And just go look at the chart. It's exploded, and it's going to go higher because we've got warmongers in the government, Republicans and Democrats. They're out of they're printing money. We had the COVID, we printing. And it's a nightmare. And this is why the foreigners want no part of our debt. Okay, and that's it. And they have to start, they're trying to manipulate the rates lower with the Fed and Powell and everyone, but they can't. Okay, and the real kicker is this. Here, look at this. Tax receipts fell off a cliff. Meanwhile, they tell us that the GDP is growing 4.9%. When GDP grows, tax receipts usually go up, as you can see in the chart. Tax receipts are plummeting. So we've got massive interest expense and tax receipts. What does that tell you? I can tell you what that means. That means another downgrade of the debt is coming. Bottom line. Bottom line. And let's look at this rate thing in perspective, okay? And this is why I tell you that rates are not going down. Okay, here we go. We had, again, 40 plus years of rates going lower. Now, if you're a technician, and I took away this, I just showed you this chart, we just broke a 40-year downturn. What does that mean? That means we are staying up, we're going higher for longer. 100% sure. We're not going back down to 0 rates or 1%. We're going, look, we may come off, but the trend is irreversible. We reversed the downturn. Now we have an upturn. You have to look at things in this kind of perspective. Okay, but look, don't fret, guys. We're in great shape compared to our partners. Okay, we got Germany here. Germany's a mess, folks. The EU is an entire mess. Look at housing activity. Look at construction. Germany is in a recession officially, and they also have higher inflation, so they're in stagflation. Germany is an absolute mess, and this is going to be serious political ramifications. And then our friends in China. Folks, this is maybe the worst chart I've ever seen for a country that supposedly is a powerhouse. Their debt as a percentage of GDP is higher than their GDP growth. I don't even know how to comprehend a chart like this. This is a mess. But there is good news. Okay? Here we look at emerging markets versus the US. Folks, I'm going to be calling this theme. You need to have exposure in commodities and emerging markets. Whether it's ETFs, doesn't matter. I'll get into it more shortly. And tomorrow, or the next couple of days, I will discuss the impacts of all this garbage that we just spoke about in the markets. So for all you investors out there, be careful out there.